very fortunately, I'm joined here today with Nick Ayton and Dmitry Koval, who are running the Crix Cryptocurrency Exchange. They're launching a lot of things coming up very soon, and they've very kindly let us behind the scenes to get a little bit behind their brain juice of how all of this is working, why they're doing what they're doing, but to talk a little bit more about the cryptocurrency market in general and how they think they can make an impact. So first, Nick, Dmitry, thanks very much for having us with you here today. Really.
Thanks for inviting us. Yeah, good.
Yeah, no, it's really good to sit with you and get a little bit behind the scenes. So if you don't mind, I'm going to dive right in because I'm eager to ask you guys some questions. But the first question is, could you please tell us a little bit about yourselves? Nick, what is your background and how did you actually get into this space in the first place? And where is this all going for you?
Well, I've been in technology since the 70s when I was coding, and I wasn't very good at it in those days. So I've been around technology and seen the last 4 or 5 decades. I've seen, all the different trends, mainframes, PC computing, right up to the arrival of the internet. And now we have this next wave of profound technologies, which is, blockchain, AI, machine learning, a whole wave of different technologies. So I'm a technologist, but not a deep technologist like my colleague here. But I've been involved in the technology IT services outsourcing space for 25 years. I've had several companies, started various businesses, some good, some bad, some indifferent. But I'm in this space because, for me, the blockchain and crypto has a profound implication on many things, which I'm sure we'll get into. But technology, I love technology, and that's the thing, I'm still here in technology.
You're still in tech, but programming wasn't your forte, you mentioned, to start with.
Like in those days, in the 70s, it was Fortran, Koval, Pascal.
Right.
It was very much syntax driven. There wasn't it was very hard. You may as well have just programmed a machine code. It was actually far easier in a sense. Right. And we used to play around and blow around chips and do stuff, see what works, trial and error. So it was, pioneering days, but it's good fun. But I'm not a coder, nowhere near.
And how is it that you met Dmitry? And Dmitry, could you tell us a little bit about yourself as well? How is it that you guys came together?
Well, let's say I'm in tech as well. So my background is applied math, and then I worked in programming, and then I worked for Cisco for a few years. And after that, back in 2003, I started a business which became quite successful in the field of data centers and cybersecurity. And so at a certain point I decided to give up the operational role in the business and just do something which I was interested in. So I found this crypto space that was back 2013 maybe, something like that. And so I decided that I need to do something in this industry. And then eventually, so you start meeting people, so that's how we met basically.
We met at a hackathon actually.
Right, where was that? Here in the UK? Or?
Yeah, it was down the road. I was working for a Chinese client who was who ran a big sort of, if you like, retail merchant marketplace out of Hong Kong, and we were looking for talent. We were looking to hire a team, so we ran a hackathon, and I met Dmitry at the hackathon, and it was a pretty successful event.
Got it. And so, Dmitry, what is it like working with Nick?
Well, I think we are so we complement each other in many different ways.
So he hasn't answered the question.
He hasn't answered the question.
Yeah, so there you go. He's being very polite.
The question,
but no, look. I mean, from my perspective, is we overlap a little bit, but we cover different ends of the spectrum. Right. But there is an overlap, and I do think that we are one of a rare combination of people that I think we see the end game the same, which is good.
Yeah,
the means to get there, it may be slightly different, but we see the same end game, I think.
Well, from the brief time we've known each other, and Chris and I have been working with you guys, I've come to see that you're both extraordinarily focused on what you're doing. Now, before we go and get into the actual Crix, the business there, the exchange and all of that, we're talking about the cryptocurrency space right now. So I was hoping we could just touch on that a little bit. And I'm going to ask you a very, very blatant question, but I think it helps to frame, where you stand in this whole cryptocurrency arena. Bitcoin.
How did we know that was coming?
I have to ask the question. I hate the fact I'm asking it, but I'm going to.
Yeah.
Bitcoin, Nick, good or bad, indifferent, and why?
Well, look, I guess the question to frame it is Bitcoin, good or bad for whom? Or who? So I think, if you look at what is behind Bitcoin, which is basically a technology, I think it's good, and I'm a big supporter and a big fan, and I think it provides an alternative to whether you think it's a payment system or what have you. But I'm a big fan, and I hope that more people will adopt it, and I think it has a good place. For decades to come, it will become more significant than it is now.
Is that what you want, Nick? Do you want Bitcoin to become adopted, and why is that the case?
Well, if without getting into too much detail, my personal belief is that what we have today as a financial system is fundamentally broken. I mean, I think capitalism is being challenged now in its current form. I mean, of course, capitalism compared to socialism and neo-socialism and liberal agenda, none of those are particularly good. But therefore, capitalism. Supported by a fractional reserve banking model, which I think we all now know is creaking at the seams. And a financial system driven by central banks is unhealthy in my view. And I think that the crypto world has the potential to provide an alternative, but it's nowhere near got the adoption it needs to be an alternative system yet. But it has the potential.
Right. And, a lot of people are anticipating another recession, another economic collapse coming up within the next 1 to 2 years is the general feeling on the internet. Whether that's true or not, when there is another economic collapse, do you think that's going to push the prices of cryptocurrencies up? What are your views?
Look, recession is on its way. I mean, housing is already infected. There's oversupply, overvaluation in most markets. Gold is starting to move, is always an early indicator. So I think it's not, and I think by the end of this year, with the trade wars of China, the sanctions that America are putting on Russia, Turkey, Iran, there is an intensification of some of the signals, including Brexit, and I think by the end of the year, I think you will see, the word recession used, global recession used frequently.
Right.
Now, is the fact that Bitcoin's there as an alternative financial system? I think it will benefit from a global recession, but let's remember, are we at 100 million users, 70 million users? Nobody really knows. If a recession comes, are people going to jump into crypto as a safe haven? Well, some will. Could we get to 500 million users on the back of a recession? I'd like to think so, but it's going to take time. But we need to tell people there's an option, which is crypto. And, people have a different perception, don't they, of crypto, good, bad, and indifferent. So if they know there's something there and we educate them, they will investigate it. If they investigate it, there's a chance that it might come in and use it. But, Dmitry sees the world differently, I think.
I'm going to ask you the same question then, Dmitry. Bitcoin.
Well, I think that Bitcoin is one of the most important inventions of last couple of decades. I agree partially with Nick, especially in part of fractional reserve banking. That's totally valid point. But I have a slightly different view on the main use case of Bitcoin. So I don't think, because basically every currency, every store of value can be either used for payments or for savings. And these are two totally different applications, because what's good for one is bad for the other, and the other way around. And I see Bitcoin, so the main use case for Bitcoin is the sort of digital gold. So it's a reserve currency. It has a potential to become a reserve asset of the world. And that's the main thing. So you don't actually need too big an option for it to become the reality, and you actually don't need too much performance of this network for this to become reality. So I think this is the most. It's a little bit different from what was the idea behind the Bitcoin white paper and stuff. But I think this is the most important use case, and this is happening now. So that's my view on that. And in terms of the adoption, so obviously this will increase, but fundamentally the cryptography is not user-friendly. So that's the main problem, which actually slows down the adoption of Bitcoin. Because actually these private keys is sort of it's a file. It's a long sequence of symbols, and it's very difficult to handle it. And if you lose it, and it's not recoverable.
It's a clumsy technology still.
So this is not user friendly. That's the main obstacle to the adoption. But for the purpose of savings, there's totally different use case. So yeah, that's my view on that.
No, really interesting, and actually personally align with both of you on the points you were making there, and I think it's very valuable. You're clearly two very intelligent guys. You've been in the technology space. You understand cryptocurrency and Bitcoin as well very well. What has motivated you to want to start an exchange of all? I mean, there's so many exchanges in cryptocurrency. Why start an exchange in this space now?
Okay, so we have actually broader view on this. So it's not just cryptocurrency exchange. So we believe that every security eventually will be on blockchain. So it's a bit broader approach, and the technology is still the same. So it's still blockchain, it's still based on the blockchain tech, same as cryptocurrency.
So it's just to pause, you bond everything.
Everything. So bond nodes, shares, everything. So eventually it will be on blockchain. So that's our belief. And therefore, what we are building is actually the new capital market infrastructure. And the infrastructure is basically it's one of the most profitable parts of every industry, and that's why we are in it. So we do not we're not looking at it as like a quick buck out of the current bull run or bear run or whatever you have with cryptocurrency. Whereas we're seeing it as a setting up the alternative, the new capital market infrastructure.
You're building the infrastructure and the pipeline for securities trading.
Crypto capital markets.
Incredible.
That's how we see it.
Yeah. And that's the reason you went into it, is you saw the opportunity to lay a stronger foundation than some of the predecessors, maybe? Or?
Yeah, I think so. We've been around sort of this industry for 2012, 2013, so not at the beginning, but fairly early. And we see the opportunity to do things better. I mean, we've been involved in helping, a range of people, with blockchain, building blockchains, as well as using, the blockchain tokenized world of raising capital. We were in relatively early, but we followed other people that were there first, and we learned lessons from what they were doing, the same as exchanges, and we think we can do it better, improve the customer experience, because it is clunky, this world, as Dmitry said, the whole cryptography piece doesn't make it user friendly, but we've learned, we've watched what's going on, we've watched the other exchanges out there, and we believe that we can do it better. And infrastructure is, if you're laying a foundation for any new market, then it's always good to be in an infrastructure.
And how long have you been working on this project for up until to date?
Well, so this is an interesting question, because I've started to build the tech back in 2014. So but actually the tech is just one part of what needs to be done in order to launch the exchange. So we withdrew the product from the market I think a year and a half ago, and started to rebuild the tech to adopt the high frequency trading and the security tokens and all this stuff. And so we are doing this since a year, I think.
Yeah, but like you said, so actually the background to this has been going a lot longer.
Yeah, but the first version of the tech has been built back in 2014. Yeah.
And so where is Crix today? Where is the platform at right now? What are the milestones that you guys are working to achieve over the next 3 to 6 months?
Okay, so we launched the minimal product out of Malta. So to get into this regulatory period set up by Maltese regulators, so as you probably know, they've passed this Virtual Financial Assets Act end of last year, and they declared that every exchange which wants to be licensed under this VFAA, so it needs to be live by October last year. So we've done the soft launch. So and now we are adding more functions to it, and the hard launch will be middle of July, which will include the full functionality, everything.
Well, let's talk about that, because I definitely don't want to brush over the functionality and what the exchange is going to do. You know, you might have seen we did a video recently talking about what we call the Exchange House of Trust. You know, I know that Dmitry, a lot of these are your values too that you believe in, where an exchange needs to have good information security, transparency, governance, regulatory compliance, all of that before the technology even comes into the discussion. You know, but let's talk about some of the juicy stuff that I like first, the tech side, if we can.
Okay.
What is the functionality that you guys are looking to offer here?
Okay.
What is this exchange going to do?
Okay, so I think that the key difference will be the algo trading part. So we will allow our users, our traders, to place the bots to the exchange.
Sorry to interrupt you so soon into that. You mean they're going to be able to have their bot directly on the exchange trading?
It won't be like directly, so there's obviously this microservice architecture, so it'll be in the same cloud. So the bots...
but it won't be on their local device or anything, it'll be their
in the same
server side.
In the same cloud, so there'll be a special server run where the users can host complete their bots, and these bots will be running on the server, but the server will be in the same cloud as the exchange service. Say the connection between the bot and the order engine, the matching engine, will not go over internet. It will go inside the data center, basically.
Doesn't that mean that the execution will be faster?
Yeah.
And what do you wow, okay. So what do you think that's going to do? Because I know that, you know, for a lot of the folk who watch the trading videos, etc. on YouTube, they're going to be very interested in execution, speed, etc. Is that why you've put this bot trading functionality in the cloud there, so that it's closer, so that the execution is stronger?
Yes. Yeah, because when you run the bot over internet, so there's a certain turnaround time, which can be 200 milliseconds, and that limits your ability to basically do the like high frequency trading.
Right.
So obviously it won't be
Can I build a bot on your exchange?
Yes.
Okay, cool. To test it out, because you know arbitrage as well. I just got to talk a little second on that. You know, a lot of folk who came into cryptocurrency, they got a hit when the prices went up. And exactly what we thought was going to happen, and my best friend John at the time, you know, he actually introduced me to cryptocurrency, and we saw the prices going up, and we could see that prices don't go up forever in any market. And when prices go down, traders are going to look for another hit, another way to make money. And what happened is everyone went towards arbitrage. And what I've seen is people have built bots, they've sold bots that don't work, and a lot of the reason those bots don't work is because of execution. So if you can solve that problem, I'm pretty sure there's a lot of traders who'll be very happy to build bots.
Yeah, so we are trying to solve this problem. Another thing is that we will be offering leveraged trading on the exchange. So you will be able to short on the bear market.
Okay, we're not done with bots yet. We're going to come to shorting now as well, because that's another big bomb you've just dropped over there. So going back to the bots, will traders be able to write their own algorithms and everything? So they'll be able to program, backtest.
Yeah.
You're going to offer all of that as a solution. Wow.
So there is some backtesting capabilities. So you run the bot on Python. You can use some visual controls, basically not to which will automate your a bit of your coding, and and then you will be able to backtest on the data, live data from
which is expensive, by the way, because the data I pay for the tool that we use at Crypto Wizards is expensive. So are you giving access to the data for people to back?
Yeah. So obviously we will have the data from other exchanges during the first period, because you need some data back in time, and we won't have this data on our exchange our first period. So we have this data taken from other exchanges. So so we'll be able to back test and then run the bot. So basically, so this is so this will go under subscription model. So if you want to use this features on the exchange, you'll have to pay like a small subscription fee.
Can I ask what the fee roughly will be?
Like $30 a month.
Oh, okay. So not the $800 a month that most API data providers are charging right now.
And the other thing about this is that the team we're working with, we're also thinking, they're working on a sentiment engine for the crypto space.
Yeah. So later down the road, say we'll add the sentiment analysis. So the separate subscription where you can.
And is this using machine learning AI to read documents, etc., from other platforms?
So you can use machine learning as of now. So you can basically do some. So you can just connect this library in your Python bot, and you can do. So we've already done the proof of concept of bot using machine learning. That's a bit different because you have to test it. It's not a back test. It's actually the actual test. So you have to run it for some time on the live market data. And later down the road, there will be another subscription added, which will allow you to, which will do this sentiment analysis on like social media, on particular keywords, stuff like that. So you'll be able to use this information in basically trading strategies.
Because we know sentiment drives a lot of price action in crypto.
Yeah.
Indeed.
So you're going to offer the sentiment analysis done for you, where people can just get that data and they don't have to write their own algorithms, etc. anymore.
And there'll be a library of also, some of these trading strategies as well available to the person who is subscribing to the service. So, yeah, it's gonna change the concept of trading for a lot of people, I think.
And why? So you're wanting to offer those strategies. Where do those strategies come from? Are they just standard strategies like arbitrage, etc., or are they coming from someone who's been in the trading world?
Yeah. So if you like standard strategies, pre-programmed strategies, where you can just change the parameters.
Oh, I see. So it's like an out-of-the-box thing where that's how you get started.
Five different.
Some standard ones that you can play with the parameters, and then of course it's a platform to create your own.
Right. So you'll be able to use this algorithmic trading platform, which is actually what you're providing. You're providing an algorithmic trading platform, if we think about it. Are traders going to be able to write at any point machine learning algos on there, do you think? Really? So they could build AI bots, etc.
So the proof of concept's already been done on that,
So you've gone past proof of concepts already on that. When do you think that would be? Maybe I'm getting ahead of myself here, so stop me if I am, but when do you think that might be ready? Is this a 2020 thing, 2021?
No, I think the machine learning, the AI thing will be available soon after the launch. That's just so the sentiment analysis will be probably 6 months down the road. But I
feel like we need to stop this interview and go and play on the Crix Exchange and show me what's going on, so I can go and make money.
So basically, so we will be launching the sandbox, probably even before the hard launch. So the sandbox will be connected to the test networks. So you can trade crypto on test networks. You can deposit the test coins, like test bitcoins, from the test net, or test ethers, whatever, and trade. There will be also data available, so you'll be able to do the bots. And
it sounds like this is going to be very newbie friendly as well. So if you're new to crypto and you want to get into trading and using an exchange, it sounds like you're providing this sort of one-stop shop. Hey, we've got the data, we've got the platform for you to test. How easy will it be for a new user to exchange their currency to get into coin, etc.?
Well, yeah. So another thing is that we have the infrastructure for fiat currencies. So we will.
How many exchanges are doing that right now?
Well, I think
Barely any.
10, maybe something like that.
Yeah, 8 or 10.
Out of the whole bunch of exchanges.
And why is that? Because it was, for me, when I was getting into crypto, it was one of the most frustrating things ever. Is there were only a few exchanges, and by the way, the ones that offered a fiat gateway, a lot of them they had to close as well because there was too much demand.
So there are a few things. So first of all, there is a general trend in banking sector towards strengthening the AML and the compliance. It's a general trend. So it's not just about crypto. So every bank now gets more and more stringent to the source of funds and compliance aspects. So that's one thing. Another thing that obviously in the beginning of crypto, so there was like the stance from the central banks and regulators that crypto is sort of bad because it's used massively for different illicit activities and stuff like that. We can talk a bit about that separately because it's quite an interesting discussion. And therefore, in like a few years ago, it was extremely difficult to open a bank account, even if you're like in blockchain business, not just crypto. But the things are changing now towards the better. So there are a few banks in worldwide which accept the crypto companies, but the requirements are very, very, very strict. So in order to satisfy these requirements, you have to basically provide lots of information, and you have to tick lots of boxes with them. So in particular, so the boxes are how you get your investments, how you fund it. That's the first question. So what type of cryptocurrencies do you accept on your exchange? So do you check the source of these cryptocurrencies? How do you do KYC? How do you do AML of your users? Everything. So and if you're able to tick all these boxes, then you can get this fiat relations. But it's very, very difficult.
And the KYC and AML, just for the folk watching this who aren't too sure what that really means, the KYC, know your customer, what does that entail? Why is this check such a key check that...
Well, okay, so every bank, every licensed financial institution has to make sure that basically the person who opens the account is this person. So you need to have so that there are some standards of how you do that. And obviously, as an online exchange, so you don't meet your client face to face. So you onboard your client remotely. And so you have to use certain techniques how you can make sure that this person is this person. So as a minimal, so you have to collect the ID and you have to collect the proof of address, which most of the exchanges do at the moment, but that's not actually enough.
Right.
So you need to do also the source of wealth, source of funds check.
And is that where the AML comes in, is checking the source of funds?
Yes. And this is what basically most of the exchanges don't do.
Wow. So those funds can be coming from
the
mafia.
If you look at any even like very reputable exchange, even with fiat connection, so you can so there are normally tiers of the account, and the tiers limit what amount you can actually withdraw. But that's totally incorrect, because what you have to do is you have to actually limit the amount you can deposit to the exchange, not withdraw, because that's where source of wealth and source of funds check comes into play. So because basically if you say, okay, so tier 2 at a reputable exchange, so you can deposit and withdraw the cryptocurrency without the limitation.
So most exchanges now are preventing the withdrawal side, but not checking the deposit side.
Yes. Yeah, and for instance, one of the biggest exchange, so the limit for withdrawal is like 200 grand a month in crypto. Well, okay, and there's no limit on deposit. So this exchange can be used, as you can imagine, as a money laundering facility. Right. Basically, if a drug dealer just pays to 20 people to deposit his cryptos into the exchange, and then everyone can withdraw up to 200 grand month, and it's a perfect money laundering scheme, right? Obviously, the banks which will be getting this fiat withdrawals, they will probably raise the flag, but it will be the exchange which facilitate the scheme, right?
I've never even thought of this.
Yeah.
This money laundering aspect for deposits and withdrawals, and so you've had to show as part of getting approved as a fiat gateway that you've got safeguards in place.
For crypto deposits.
For crypto deposits,
because for fiat, obviously the bank. So if somebody has the bank account, then the bank will check this.
Right.
So we just need to check that the money comes from the bank account, which belongs to the user we have, to the same person we have on file.
So just to confirm,
actually, not all exchanges do this as well.
Really?
So you can potentially deposit from the third-party account.
Mm-hmm.
So I'm not sure. So I think some of the exchanges, they don't check this. So this is important. So we check that the fiat money comes from the same person. But it's relatively easy to do. There have some nuances there, but but it's relatively easy to do. But the most important part is to check the crypto, and then. So you have to check. So basically, you have to ask the person where they took this crypto from, and then we give some options. So, if, for instance, so we can do some blockchain analysis, and that's basically It's an interesting, as I said, the illicit use of bitcoins and cryptos is an interesting topic by itself because all these people who actually once the Bitcoin became a sort of known thing, so a lot of people started to use it as basically mean for illicit activities, but they don't understand that actually Bitcoin has absolutely unrivaled capabilities of transparency, because you can look at blockchain and you can trace every single coin up to the origin. And actually, it's very easy to track all these illicit activities on blockchain. So these people just don't realize that because they think it's sort of anonymous. It is, but you can trace, and we can use this. You can use this for an AML check as well. So, for instance, there are databases of like wallets associated with Silk Road and what have you, the darknet. So you can basically raise the flag if you see the incoming transactions coming and these UTXOs and the tokens inside this transaction touched this wallet some time ago. And same way we can check that, for instance, if a person has bought the bitcoins at $100 like 4 or 5 years ago, and we can allow and this bitcoin stayed there for this time, we can see this and we can allow them to deposit more, because basically there is a limit which is normally like $10,000 size of deposit, and everything above that has to be checked.
So there are a lot of misconceptions out there about anonymity on.
Yeah, so there are many things which you need to have in place when you're basically doing this source of wealth check. And if you do it properly, then you basically you can be connected to fiat world. So that's the bottom line.
So a really good filter. What I'm learning here is that a really good filter, if you want to know whether an exchange is reputable, stage one. Does it have a fiat gateway? Because there's a lot you have to go through to be able to have a fiat gateway. Yeah. So that's filter one. What's filter two? What's the next? What's another telltale sign that the exchange you're using is reputable? Like what you're trying to build here?
Well, so obviously the transparency is very important. Say if there is no team on the website, so one of the biggest exchanges. So if you try to find who the team are.
You're not going to name the exchange, are you? Or?
No, I'm not going to.
Okay.
You can find the team, but you can only.
But if I went on the top 10 exchanges on, I don't know, coinmarketcap.com and I looked at them, would it probably fall within that top 10 list?
Maybe more.
But who's the team? Where are they incorporated?
Yeah, so,
Yeah.
So the team, who is the team? So you can find the team on this exchange I'm talking about, but only if you Google, because they've done an ICO and there is a white paper which you can find. And there's a team there, and so the CEO is quite famous, but otherwise you can't even find where they're incorporated.
Interesting.
Yeah, so there were like rumors that they're moving to Malta, but that's not the case.
And you have to wonder why. What's the agenda in the background there? Why not be transparent?
Well, probably because of this. So I personally had one of my bank accounts shut because I had involved in crypto.
Really?
Yeah. So there was one leading European bank, very famous. I won't name probably. So they called me and said, we found in your LinkedIn that you're involved in crypto, so we need to shut you down.
You're kidding me.
So you have to.
Is that legal? Is that even?
Yeah, because yeah.
Wow.
Banks don't have to disclose their reasons for doing things.
Yeah, so they can say you have to withdraw the funds within a couple of months, and that's it. Yeah.
But at least they didn't freeze the account. They asked him to withdraw his funds. So, we know examples where the banks, you touch crypto and they just freeze whatever's in there. And then you have to,
This was that I obviously provided all the source of wealth documentation and stuff like that, so they were not able to seize the balance. But actually, I crossed the road and opened another account, and that bank is different.
The bottom line is that we touched on this before. The early adopters, the pioneers that go in and create exchanges, it was the Wild West, and they are where they are. And the majority of the regulation and the regulators and the regimes, the capital markets regimes, are all having a close look at these exchanges now. And will they survive? Well, they're going to have to do massive change to survive because they don't meet all the requirements. There's some newer exchanges came on the second, as a second wave. They're slightly better, but exchanges and the way we've approached it is that, and it's a lot harder. But we're doing it from almost within a regulatory capital markets environment. So day one. So everything is thought about, and it's very evasive. I mean, they check everything. Right. They go back in time. They want to know who we are, where we've been, who we've touched. It is completely a different process. And you've got to remember, we have two exchanges. One is on the crypto fiat side, and the other one is touching securities, which is an even more invasive process. Again, fully regulated in the major capital markets. So therefore, it is not for the faint-hearted. If people want to get into exchanges and get into these new exchanges, you are going to be examined very closely, and you're going to have to show line by line how you behave, how you act, what your policies are for every situation to do with handling crypto, fiat, and other financial instruments.
I mean, Nick, Dmitry, I want to come back to the functionality of Crix in a second, but there's a really important point here that you've touched on. I have to ask the question. Securities, all being in crypto, on the blockchain, etc. What does this mean for investment banks? Does this mean they have to adapt and start digitizing everything on cryptography, or do they become redundant? What happens?
No, they won't become redundant, but they do adapt.
Right.
Because
they are adapting. Yeah.
Morgan issued the cryptocurrency for settlements, so that's an example.
And Goldman Sachs bought Poloniex, didn't they? I think.
Yes, and then another example is quite recently a big STOs has been approved by SEC. So it's another example. It's tokenized securities.
But the investment banks, you love them or hate them, but I think that number one, Wall Street has a behaviour where they like to control the price of things. So there's a lot of rumours around, their ability to influence the price of Bitcoin, for example. And Bitcoin, let's face it, drives the market, pretty much. And then you have, they like to buy and sell things. But at the same time, they're also looking at blockchain as a legitimate cost out technology. So decentralizing and providing transparency has a lot of cost benefits for a large company. It's just an intrinsically more efficient way of doing things. But when you look at capital markets, you buy shares, so what happens? You get a share certificate. So you go through a broker or you buy through an exchange, eventually you get your share certificate. If the management team then has a meeting to change the dividend policy, or the capital table of all the shareholders have to be updated on a regular basis, there's a whole bunch of back office processes around called corporate actions, which are around, reflecting the change in management's policy or dividends to the shareholding community, and they're updated with that information. When you digitize all of that and you make it, you use this thing called smart contracts that everyone talks about, but what you're doing is you're encoding the law, the rules, the commercial principles, and the arrangement of these instruments, knowing that they will be executed automatically.
Right.
So these
there's no room for
digitization,
fraud, manipulation.
well, yeah, I mean, it removes a lot of the opportunity for manipulation, because as soon as a process touches a human being, you open up the opportunity to friction, time, cost, manipulation, mistakes, errors, and but when you digitize all this in a background of a coded smart contract, which it basically enforces, and you know with confidence that things are going to happen, it's massively efficient for the banks to embrace that. They can take back office costs out, and it gives confidence to the investor, and it should give confidence to the whole community that things are going to be done right the first time.
And like you said, we're already moving now in this direction.
it's going
Things
that
already
way.
happening.
Another thing is the settlement time. So basically, when you trade securities or any other any securities, so the settlement time is normally so the minimum settlement time is 1 day, but normally it's longer, especially if it's an alternative asset or it's a structured instrument or whatever. So it can be up to a few weeks when you get the actual settlement of the trade. And in crypto world, so you can do this basically immediately. Hence this name T0 for one of the projects in the space, right? So T0 means that it's instant settlement.
Fascinating.
That's where blockchain actually brings the value to the securities market.
Now, Dmitry, you've sowed a little seed in my brain, and it's stayed there, and I'm ready to talk about it now, which is leverage shorting.
Okay.
And the reason is because, and a lot of people, anyone watching this, some will agree with me, some won't, but I see a lot of cryptocurrencies a bit like penny stocks. 99, or I should say 90% of them are bullshit. And that creates a lot of opportunities for traders, because in the penny stock market, and I know a trader, Stephen Ducks, who did very well out of this, you know, when something that you know is a piece of crap goes up, you know what goes up must eventually come down. And he made a fortune shorting these, and it's been very difficult to do that same strategy in the crypto space. But you know, for the traders watching, there's a very good strategy there where you can have very high reward to very little risk, by shorting, by protecting your stop loss, and by shorting at the point in time when you know this piece of crap company that's not even real has been booming up because of sentiment or hype or shilling or whatever. You need the ability to short to make that money. So are you going to offer the ability for people to short?
But I need to make some clarity here. So first of all, we're not going to trade the shitcoins and all this like
Okay.
currencies.
Damn it.
That's first thing. Because basically, yeah, you have to remember. So when someone shorts this crap coin or penny stock, so there is another side of the trade. So someone else longs basically. So in the end of the day, so someone always loses. So if someone wins, someone always loses. So this is sort of thing. Yeah, we don't want to consolidate for the like shit coins. And also the second thing is that when you do this leverage. So especially in cryptocurrency where there is no fractional reserve possible, so you can't basically do this on paper. Right. So there are basically like three options how you can do this. The first option is sort of like derivative, which we're not considering because it's an additional regulation, and and all these derivatives which exist in the market today is more like casino style, like gambling style instruments rather than the actual normal things. And another stuff is when you actually borrow these coins and sell them on the spot market, and therefore you create the short position. But the buyer basically walks away with the coins they bought. Right. So that's the second, and this is divided into two different approaches how you can do this. So you have to provide this liquidity for lending of these coins in order to be able to short them, right? And this liquidity can be either provided by the liquidity provider or by the professional company which specializes in that, or by the public. And our way to go is the liquidity provider. So the professional liquidity provider will be providing the liquidity for the leverage. but that means that this company has the positions in all these crypto assets. And therefore we won't be able to do the smaller cap. So we will do the leverage for major currencies like Bitcoin, Ethereum, Litecoin.
And so your filter for that is market cap or track record or
market cap, the trading volumes, and so basically, these guys who provide the liquidity. So these are the investment companies which hold the positions in every asset. So obviously, if it's a crab asset, so nobody will hold the position in it substantial enough to provide the liquidity. So that's the point.
Okay, so people like me who want to take advantage of the shitcoins, they'll have to trade it somewhere not as secure as Crix, but we can short on the decent coins on the Crix Exchange, which is actually very useful because you do also need liquidity if you're shorting like that. So that's awesome. So Dmitry, there's a few other things as well I wanted to ask, just specifically about the exchange. One is, what incentives are traders given to use your exchange? Bear in mind, there's a lot of exchanges out there. You've got the algo trading, you've got a fiat gateway, you're offering leverage as well. What else? What else are you doing?
So I'd like to mention a couple of things. So with regard to fiat gateway, say there is a bit of disparity on the market at the moment, because if you, for instance, if you register with Coinbase from the UK, so you can't trade dollars. So you have to do pound sterling. Same goes with Kraken. Same goes with other major exchanges. So the markets are segmented. That's because normally the European banks which serve crypto companies, they don't want to put at risk their corporate accounts with US banks, and therefore they do not provide you the dollar connectivity. So what we're gonna do is we're gonna work with the FX provider. So we're gonna maintain just one market, the USD market, because it's the biggest one. So the customers in the EU or UK will be able to deposit only euros or pound sterling, obviously, same as with others, but we'll have connected the FX broker who will be exchanging the currency to US dollars at a good rate, so at the rate like TransferWise Revolut does. So same, so pretty much good, close to the FX market exchange rate. So euros will be automatically converted to US dollars. You'll be able to trade, and then when you want to withdraw, so this will be the other way around. So you exchange to euros and withdraw. So nobody does this so far. So that's sort of unifying, consolidating the market.
Who else is doing that right now?
Nobody.
So you'll be the first.
Yeah.
Cool, man. Okay.
Yeah, and and the second part is we'll be motivating. So we'll be paying the small rebate to everybody who makes market. So basically, if you put the limit order on the exchange and it gets executed as a limit order, so you get paid for that.
So you could...
So you get negative market maker fee.
Right. So
you charge the market take fee. So normally all the exchanges they have different fees for takers and makers. So taker pays higher fees, so the maker pays lower fee. But in our case, the maker fee will be negative. So the taker pays the fee, and a fraction of this fee goes to the market maker.
So you could actually program a bot that takes advantage of that.
Yes, correct. So it's market making bot basically, which takes advantage of the spreads and does the market making. Yes.
And you encourage this?
Well, of course, yeah.
And what made you decide to go this way, to incentivize the market maker and the taker pays?
Well, it goes back to all the parts and components you need to have in place to start a crypto exchange. One of which is the liquidity.
Right. So it encourages liquidity.
Yeah, and we've secured a few institutional liquidity providers, but we also want to encourage the retail liquidity as well. So yes, and this goes in hand with another thing is that with the security part of things, because we're going to use the third-party custodian to hold the crypto assets for us. So we won't be holding ourselves the keys.
Okay.
Not all the keys at least. So we'll use major. It's not signed yet, so probably not good to mention it. But
right.
It's a major. But or we can use it, or we can name it. I don't know. So just cut it. Yeah.
Don't worry about
But
me.
okay, so a little bit BitGo. So BitGo is the biggest hot wallet and custody provider in the crypto space. So they started as a hot wallet, and currently they are licensed. So they got the trust charter in South Dakota, so the licensed custodian in the US. Which means that they provide both the hot wallet service and the custody service, which is cold wallet service, and it's licensed as the proper custodian. So the crypto assets, most of the crypto assets, because they don't support all the cryptocurrencies you're going to trade, but most of the crypto assets will be stored in multi-sig hot wallets, and then at a certain point in cold wallet provided by BitGo. So they have some insurance in place for the cold wallets, and potentially will have some insurance in place for hot wallets as well. But this has so we have to pay the fees, which will be bypassed to the customers, of course. So every withdrawal will be some small percentage.
Right.
And in order to compensate those who keep their crypto assets on the exchange, we provide this rebates, so they can basically not just keep their assets on the exchange, but use the market making bots to make some money on it.
Wow.
So that's basically the.
It feels like to me that, so when I'm, since even before we sat here today, since we first met at the Guildford interview, when Chris and I were there and we were speaking with you, you were presenting that day. I get this impression that you're really trying to build these solid foundations to take care of each different type of interest here.
Yeah.
That tells me that you really are here to stay. Do you have an exit plan with this exchange? Are you looking to put something in and then sell it? Or is this something that you guys are literally trying to build for the long term? This is a 10, 20-year play for you. You're going to a great lengths here to take care of every single stakeholder. Do you know what I mean? You're not really niching into one.
Do you have any idea how old I'll be in 20 years' time?
No idea. No idea. But, after eating pancakes for breakfast,
No, look, what we want to do is, I think we are in it for longer term, but for us it's all about growing the trading volume. So if we do the right things and we attract the volume, then of course this infrastructure that we've created does become quite valuable. But equally, we get telephone calls all the time from people you may consider competitors or what have you. But ultimately, at some point, we may have to link order books together and create a global market for this stuff.
Right.
We want to see some other exchanges come on. I guess we feel we have enough competitive differentiators at the moment.
Right.
And I think we'll attract, a big share of volume. But it's important that a lot of other exchanges are out there, because we want to create a crypto capital markets, and
right.
We need a lot more players geographically and regionally and what have you. But what's the exit game? There's always an exit game. I'm not sure we're going to tell you exactly what it is, but
I wanted to ask anyway.
But I do think it starts with let's scale the exchange we have for crypto fiat. Our other exchange is there, but it's going through regulatory approvals, which is far deeper and more onerous, and that'll come online sort of towards the end of this year, beginning of next year. So collectively, we decided to keep crypto and sort of non-crypto fiat different, separate, because the compliance departments of banks and the institutions don't like allegedly clean dollar, mixing with crypto. But at some point, they are going to merge.
Yeah, they have to.
And the regulators will probably allow that at some point. And the other side of our business, don't forget, is we can do the primary issuance as well. So we can engineer entirely new digital assets from the beginning. So therefore, there's lots of options here but Dmitry and I just want to take the good companies, the good projects, the good digital assets with some provenance and with the right wrappers, legal governance, regulatory wrappers around these digitized instruments. So once they're on the exchange, because we have to report to the regulator all the time. I mean, Dmitry and I have been thinking about trade monitoring apps, for monitoring behaviour on the exchange as it happens, to make sure there's no adverse behaviour or anyone's, being naughty on the exchange.
I mean, Nick, you're going up against some big exchanges here too, right? You're not trying to build a micro exchange here. With what you're offering, you guys are in this to compete with some of the larger
Dmitry's
guys.
as he said earlier, he pulled the exchange out of the market and has rewritten it to scale.
Right.
So it is engineered now to, if necessary, compete with some of the bigger boys.
Right.
I don't think we're looking at competing with NASDAQ and New York Stock Exchange, the tier 1 stuff. Sure. But certainly, if you think about the exit strategy, I'm sure they're going to be very interested in what we're doing. If we achieve some scale, they'll either want to partner with you or buy you, won't they? So, we've had a few people from the London Stock Exchange knock on our door and say, very interesting what you're doing, can you tell us more? And to this point, we haven't told them much, actually. We've kept to ourselves until we're up and running.
Well, what I can tell you for sure is I'm very interested and excited to start developing bots right now, but bots that work, not the typical BS that's sold to people to take a quick buck from them. A bot that uses a simple strategy that's proven, that just a maker bot, maker fee bot was a very interesting suggestion of yours. So I'm really looking forward to doing that and getting on your exchange and doing that. How long do I have to wait until I can sink my teeth into it?
Well, we plan to do the hard launch middle of July, and, which means that there will be fully connected to fiat in US and EU. And we solve these algo trading capabilities and the sandbox a bit earlier.
Yeah, and your algo trading is going to offer machine learning, of which I know because I've researched right now, and any folk watching this can correct me, but I've looked, I can't find an alternative algo platform that also offers machine learning with the data and everything. So for people like me, a lot of the traders out there in crypto, what I can say for sure I know, already have either full-time jobs and they trade as well, or they have part-time jobs and they trade as well, paying a lot of money for data, paying a lot of money for bots, etc. is, when you bring it all to a one-stop shop where they can turn up, they can get the data, they can have an idea and put that idea straight into an algorithm, is going to appeal to a lot of people. We'd be very, very keen to test out your platform and to document that process and that journey and evolve with you guys and see how that goes. But from what I've heard today, I just really want to wish you guys the utmost success with this. I really hope you win, because I know from meeting you as people as well, your heads are certainly in the right place and you're doing everything by the book ethically. You're going the extra mile. I really think you're going to win. What can the community do to support you? What help do you need from the community to get your vision going?
We've been strong advocates of doing things as well as you can, given that this whole crypto world does attract some very strange players, some very strange participants, and the community needs to start policing itself a lot better. And I think it is. I think serious communities are starting to call out bad behaviour. They are starting to avoid the projects and the exchanges where there's a great deal of uncertainty about how that's being run. And also, hopefully, this conversation now is that a lot of the people out there, communities trading, crypto enthusiasts, don't know there's bad behaviour and bad practice going on until you point it out to them. And then you show them what good looks like, and then they can make their own judgment. But ultimately, we're dealing with people's money. People work hard. They want to get a return on their money, because traditional capital markets, it It doesn't deliver for most people. It does discriminate. Capital markets, fractional reserve banking does discriminate against the people, and people who want to deploy some of their capital and take some punts to try and get a better return, they want to know it's a fair game.
Right.
And in essence, is capital markets a fair game? Well, by and large, it probably is. But it's also, been exposed in 2008 that the people that are meant to be keeping an eye on it were asleep at the wheel.
Right.
So, there's a great deal of mistrust still in anything to do with capital markets and money markets. And then if you peel that back to the UK specifically, for example, you can argue that every financial product here has been missold, whether it's PPI, whether it's mortgages, whether it's pensions, car finance, they're all misselling. In the US, it's the same. All the big bubbles are being created, and subprime is created by misselling. And that's because the rules of the game are very open. There's lots of grey areas. There's lots of ways where the bad actors can operate. What we're trying to do is to play by the rules as defined as they are, to provide an environment where the game is more assured. You can see what's going on. It's more transparent, and therefore that should give confidence to the community that our exchange is something they should consider, try, look at. And compare with other exchanges. So we're really interested in making sure the game is fair, and as fair as you can. And if you remove the human element, it makes it fairer. Frankly.
Yeah, another thing is that the key problem, say, of the crypto market now is manipulation.
Right.
So this is cornerstone problem at the moment, because basically in order for this market to develop, so you need to have the institutional capital coming in. And normally, in all capital markets, the institutional goes hand in hand with retail. So, and retail means the regulation, and it's sort of like it's all like connected,
right,
things. And what prevents the institutional market, institutional capital to come into the space, what prevents the regulators from starting to regulate the space is the manipulation. And so recently, so there are many types of manipulation going on crypto market. So I've read an article recently about the manipulation with the volumes of the order books and trading volumes on the exchanges. So for instance, if you analyze the data, so the trade data. So normally, so if you have the spread, then every trade has to be on one of the ends of the spread, right?
Right.
So, but on many exchanges, so you see the trades which are either inside the spread or outside the spread, which means that this is the manipulation, obviously, because this means that this is sort of side trades going on, or self trades or whatever. So another stuff is so-called stable coins.
Right. So Dmitry, I know with stable coins, you've got a view. Please, can we cover a little bit here on stable coins? What is your view on stable coins as they exist today?
Okay,
go.
So so there are two types of stable coins. So the stable coin back to the fiat currency, and there are a few of them, or the stable coin back to some bucket of different assets or whatever, can be algorithmically backed or somehow. So I'm not talking about the second one, but the stable coin backed to fiat. So they have the fundamental problem is that nobody knows how much money is actually on the bank account of the company issuing the stable coin. So obviously you can do the audit, but audit is done like once a quarter or whatever, once a year. So the best case, you have the audited accounts, which are like a few months outdated, so a few months back.
So as long as at that quarter end, when that auditor's checking the balances, etc., that they tie, anything between the start of a quarter to the end of a quarter, anything goes, right?
Yeah.
Wow. And we're talking about Tether here.
Yeah, well, yes.
And others.
Biggest one.
And others.
And others, but
Okay.
that is obviously the biggest one. Yeah.
Okay.
And then what you can do, then there are markets where the Bitcoin and other cryptos, but Bitcoin being the main crypto asset, is traded not to the fiat currency, but to this stable coin.
Right.
And once you have this sort of like window of non-transparent situation, so you can manipulate this market. So basically, you can issue this technically. You can issue this a bunch of these coins, go trade on this platform which trades the stable coin against Bitcoin. You can pump the price of Bitcoin. So
I feel like we need a whole separate interview on stable coins.
I'm not saying that this is being done,
but it's possible.
Yeah, perfectly possible. And that's why my view is that no Bitcoin ETF will be ever approved by SEC while there is Tether.
No Bitcoin ETF will ever be approved by the SEC while there is Tether.
Well, there are markets which allow to trade Tether against Bitcoin.
Because there is room for exactly what you were just describing, for manipulation.
Because when you have this ETF approved, it goes retail, so the company starts getting money from retail, and that's a perfect situation for potential manipulation.
Right.
What happened in 2017?
Yeah.
So again, so there were like, I'm not saying that there was sort of like agreement between the parties, but the situation looked like the following. So basically, there was a pump on Bitcoin price, and on the wave of this pump, so Coinbase actually done lots of advertising stuff on their wallet. So a lot of retail people, the retail investors, came in to Bitcoin, which actually multiplied this pump.
Right.
And then basically those who started the pump were able to exit.
Yeah.
So basically, who paid for that? The retail
traders.
Retail investors. So I
no different to any other market.
I can go further. So all these ICOs, which were fueled by this pump, and 90% of these companies are actually are nowhere at the moment.
Right.
So who paid for that? The retail
traders.
Yeah. So who actually bought the Bitcoin at 20 grand.
And what you're trying to do, and it actually aligns very well with the Crypto Wizards initiative, is you're trying to level, and Nick, you said this over and over and over again, you're leveling the playing field. That's really what you guys are standing for here, is just bring transparency and level the playing field, because we're in this together.
Yeah, I mean, look, if you're smart and you're clever, then there is money to be made.
Right.
But at the same time, you know, the truth is very difficult to get in the crypto community. You know, whether it's on an exchange, whether it's what's going on behind a project that's being funded by crypto, it's very difficult to get the facts and the truth.
Right.
And therefore, you know, the Crix Exchange is focusing on a different kind of behaviour, because it's aimed at, see, the one we have to report for two parties, don't we? We have to report to the investor trader community, so we have to tell them what's going on, but above all we have to report to capital markets regulators.
Right.
And they want to know exactly what you're doing, who's involved in your community. It's a trading market. Who are the players you have? How are they behaving? How are they performing? What are they doing? How much volume you've got? How are you settling? You know, because the worst case scenario is people getting hurt in a community.
Right.
And in a regulated environment,
always pays.
In a regulated environment, there is recourse because you can complain to a regulator.
Right.
In an unregulated environment, there is no complaint. The regulator will say, well, you know, it's unsanctioned, an unruly market. Buyer beware. It's up to you. You were foolish enough to get in. There's not a lot we can do.
Right.
So, but I mean, look. Let's just my comment. Six pennies worth on stablecoins. You know, I can see stablecoins linking to an underlying asset like gold, a gold-backed stablecoin or a basket of precious metals. I can see the value of that because it would lean to a natural hedge instrument if that was paired on an exchange to other things. So that makes sense. But let's think about it. A stablecoin linked to fiat. Over the last 600 years, all fiat currencies go to zero. The dollar has lost 97% of its intrinsic value.
Correct.
It is going to go to zero.
Right.
So be careful what you wish for. Stable coin back to fiat. So I rest
Be
my
careful
case.
of a stable coin that's linked to something that's going to be about as valuable as the Zimbabwean dollar.
Exactly. There you go.
Yeah, so it doesn't make much sense.
Right.
Yes, but it's a perfect instrument for the manipulation. But I think is that so our
You heard it here. An instrument for manipulation, not that's its use case.
our stance is just to bring as many traders who use stablecoins to fiat trading.
Right. Because you're trying to make that gateway to fiat and the accessibility from fiat to crypto easy.
Yeah, obviously it won't happen everywhere in the world at once. So we'll start from the US and the EU, but we are in talks with different players in Asia as well. So we might be able to allow withdrawals to the local currencies in Asia. So, and then later the deposits, because it's obviously it's more difficult. But yeah, we are talking and also giving them the opportunity to exchange to USD, just to consolidate them to the single USD market, because USD volume is the biggest volume. So we want to sort of boost this and maintain this as a main market. And also, so generally speaking, say crypto, there's a fundamental difference between fiat and crypto, and between the currency for spending and the currency for saving. So because when you're buying something, paying with a currency for buying something, paying your bills, so you expect this currency to be stable. But when you are saving, so you expect this currency to grow in value. So you expect your savings to grow in value. And this is sort of things which are contradictory by nature.
Right.
Because how the fiat, how the central banks and the regulators, how they maintain the stability of the fiat currency, how they fight with the volatility of the fiat currency. They just print the money.
Yeah.
So the value of the currency goes down, and that's the price for its low volatility, for its stability.
And when do we pay the price?
Yeah, well, with the crypto, so the supply is limited by the algorithm.
Right.
So you can't print the money, you can't...
You have to face the pain today.
Yeah.
Which creates volatility.
and this creates volatility.
Which is correct.
Yeah, and this is good, but you don't care if it's volatile, if you don't paying with it, if you're just saving with it.
Right.
So you have the long term, and the long term view is that it goes up,
Yeah.
but you don't care about the volatility.
Because it's scarce.
Right.
Yeah, because it's scarce.
Right.
Yeah, so that's the difference. That's why I personally think that the main use case for Bitcoin is the asset for saving.
Right.
Rather
than the payment system.
So can it become a reserve currency? Yes, it can. And will it?
Maybe.
Maybe. But you got to think back to some of the things. So the majority of youngsters out there, maybe your community, then maybe millennials or maybe a little bit older. But the thing is that they have to think back to, history and economics and history repeats itself all the time. So you go back to 1971, so Bretton Woods, when the dollar came off the gold standard. That enabled, as Dmitry said, is the central banks to print money. At that point, supply was controlled because it was pegged, I think about $34 an ounce or whatever, but it was pegged to gold. Now, why did Nixon come off the gold standard? Is because after the Second World War, the Fed became the central currency. So the US dollar became the reserve currency. The Fed became the world central bank in a sense, and France and England sent its gold reserves to the Fed. So that happened straight after the war. So then we went to a basically US dollar global economy. But what then happened just before 1971 is that France and the UK asked for their gold back, or their money back, or the US equivalent.
And let me guess, it wasn't there?
And it wasn't there. So they had to come off the gold standard so they could get the printing presses going. So since 1971 to now, and then Clinton in around sort of like 94, with the Glass-Steagall Act, basically allowed the banks to leverage their balance sheets to become too big to fail, which was actually a strategy. Because when they, so it allowed Travelers and Citi to merge, I think it was, and they become these enormous, like RBS, Fred the Shred was allowed to build it into one of the world's biggest balance sheets. But the problem with that, of course, is that at some point they were going to fail, and they knew that the taxpayer would have to bail them out because otherwise the system would collapse and the government wouldn't allow that. So it's actually a known strategy. But so when you look at money, there's a difference between currency and money, and Dmitry's articulated that very well. But a lot of people have to think about why is crypto significant. Well, now, having just said what I've said, is that the fractional reserve banking system and the Fed-based economy is not working because there is no restrictions. There is not one government on the planet that has the fiscal discipline to manage currency on behalf of the people for savings or what have you. So
you need to take it away from the humans.
And the reason being, and the reason being is America, the UK, whatever, what are they thinking about? The next election. So they're using money supply, the printing presses, to win favour with the electorate. If you go to the GCC, Saudi, Kuwait and UAE and what have you, or you go to China or Japan, they actually don't behave like that. And I know their economies are mixed and varied, and they are sort of like benevolent dictatorships in a sense. But what they do is they do have a 25, 50-year plan, and they plan their economies and they plan their currency and they plan things around a much longer term view. But in the West, it's all about the next election. So if you've got a Western-driven banking system that is driven around that kind of doctrine and behaviour, then the dollar's going to go to zero very, very quickly. Sterling will fail, the euro will fail, because they are, the European Central Bank is exactly the same as the Fed. Right. And they are printing capital, they're destroying the value of our assets, our houses, our pension funds, our savings.
And what's propping it up, Nick? Is it just a belief? It's a belief system?
They don't think it, well, I've spoken to various central bankers and they don't think it can fail. They think they can just keep printing money. They really do. And people said to me, we're over leveraged now, debt is into the trillions, but
we're
hey,
talking like 20 trillion, just the US alone.
Much more. Global debt is about 240 trillion. I think the US, in fact, there's a website you can watch the US debt clock. Yeah. Very interesting. But I think their debt is 4 or 5 times.
So it must just be a belief system then, because if we believed the dollar was worthless today and stopped accepting it, surely that's the only thing that will allow it to collapse.
Look, the other way I explain this is that in the 50s, my parents bought a house. So my parents are war generation. My dad's dead, but my mother's 91. War generation, they bought their first house for £250. At that point, my dad's salary was £300 per annum. So there you go. The value of your house and annual salary.
Outrageous when you think about it.
Right? So where are we now? That same house is probably close to $1 million. Yeah. And the salary is probably 40k, 50k.
Somebody who earns
a
6-figure salary.
Dollars. We talk US dollars. So someone today who's, say, around my age, between 30 and 40, they earn a 6-figure salary. They are able to get a mortgage, maybe if they were able to save, and they're able to pay that mortgage off over, say, 30 to 40 years. That's how the economy is working now. And so for somebody to have a 6-figure salary is the minority. The masses are earning, I think the average salary is 35 to 40.
But you have to pay off student debt. So if you went to university, you've got that as well.
Right.
Okay. You have inflation. And if the interest rates go anywhere around 5-6%, you're paying for that house over 40 years twice.
Yeah. And I believe, and we do have a person from France here in the room, mortgage means agreement till death, I think, if you translate it from French to English. Is that right, Francois?
Yes,
mort.
Yeah, death.
So it's the mort bit.
It's the mort bit. That bit I understood.
Yeah, but look, I mean, so there's lots of parallels. So, if you think about it, every financial product is being engineered to work against the people, right, for the kleptocrats to take money out of the top of the system. Okay, so this is my libertarian side coming out. so the reason why is pensions, failed product. Doesn't deliver for anybody apart from civil servants who get employers' contribution of 26% in this country. They're the only people that make money. So what happens to a pension? So it's basically a tax wrapper on payroll where they take a contribution out and it's matched by your employer. But you need £367,000 in your pension pot to draw £1,000 out a month at retirement. Right. Well, that's already beyond 90% of the population.
Doesn't add up.
Okay. The second thing is that pension pot, 40% of your savings over that 20 or 30 year period is taken in fees and charges. 40% in fees and charges, but it's never disclosed on the pension company's balance sheets, on the product, on your statement.
Right.
Okay? And they invest your pension money into things that deliver quite often zero or average market returns.
And why do they do that?
Because of the reliability, so they need to...
100%.
So what would you say to somebody who's saying, hey, I'm paying into the average pension, I've got employer contributions of 5 or 10%, and that's what I'm doing with my money. Would you tell them, stop?
Absolutely. Pension is a failed product.
Yeah.
So you may end up with, I don't know, £200,000-300,000 in your pension pot after fees and charges. Then you have to convert that to buy annuities. So ultimately 200 grand, you can't live off that.
Sure.
You know, so unless you've fortunately paid your mortgage off, okay, which you've paid for twice, and if you happen to get ill, you know, all the insurance health systems bail out at 70, 75. No one will insure you. The government will then put everything, if you die, into probate, and there's inheritance. It's, you know, they're taxing the people who've already paid tax on their money. They're taxing the people again and again on the assets they hold. And the people that sell you these products aren't delivering for you anyway. So we need a new capital market system, and my belief is using tokenization, digital assets. We need a new class of new products that can't be tampered with, where you have micro zero fees and charges.
Right.
So when they are designed and they are traded in the market and they are used as investment capital, the real returns are there because the charges are maybe small percentages, 1 or 2%, not 40% on a pension pot. So that's robbery. That's like being raped with your eyes open.
Well, I think it is. I mean, I've stopped paying into a pension, legitimately stopped years ago paying into a pension for this exact reason. I believe the same thing you do. And so really what it comes down to is I want to stop paying money into a pension, but I want to invest in something. I want to own a piece of Trump Tower, or I want to own a piece of real estate or a piece of a business through tokenization. Right now, the barrier is this complexity from getting from the currency we are using today, the US dollar, the pound, the euro, whatever, into that token.
Well, the democratization of capital you're talking about, which is where phase 2 of our exchange, which is the token writer exchange, which does security tokens or digital assets to fiat currency.
Right.
We're not even going to go near crypto. So it's very traditional, digitizing conventional instruments, shares, stocks, bonds with warrants, convertible notes, real estate. I mean, I'm not too buoyant on real estate because by tokenizing real estate doesn't make it liquid. Mm-hmm. You know, you still need a market. But you know, the digitization of things is more about the democratization of capital, because you can have fractional ownership, you can have very small parts, and you can open it up to everybody, and everyone can see what they're getting involved in, what they're buying. They know it's a fair game. There's microservices fees involved, so maybe somebody could, you know, Doris, who's on minimum wage. Maybe she could afford to buy a small share of Trump Tower. Here's another thought.
It levels the playing field.
Imagine if we could actually re-tokenize Amazon shares.
Right.
Facebook shares, Amazon shares, most of us don't get a look in for these premium shares. So the VCs and the big pension funds and what have you, they get first dibs and the retail never gets a sniff. And these are up hundreds of thousands in percentage terms and they're making their money. But imagine if we could buy a very small fraction of an Amazon share, which I think is probably trading at $1,500, whatever it is. But imagine if you could buy 10 quid's worth.
Right, because now you have access to doing it.
So democratization of capital, using crypto to create new instruments that are fair, more transparent, with smaller fees. You take friction out of the system. All of these big institutions, they're designing products that can be sold through layers of advisors and salesmen, and look at pension products and insurance products. They're sold through industry layers. In the world of blockchain, you don't need all those layers. You can have retail to product, collapse the rest of it. That's all cost. It's all friction. It's all cost. You digitize it. There is no process needs for any of these people. They had no value.
And everything can exist on this ledger.
And if you trust it, you can buy it. You know, you get everyone buyer beware. You can read what the instrument's about. You know it's fair. You make your own decisions. You're not being there's no mis-selling in a blockchain collapsed market. But in the current world, mis-selling of pensions, mis-selling of insurances, everything's mis-sold.
And so, Nick, when does this happen? The global capital markets, this digitizing of securities, etc. When is this all going to be mainstream?
Well, it's coming, isn't it? I mean, so there are some security tokens out there, but for the security tokens to be created, which we can do all the time, you need a place to trade them. So these exchanges are coming. 2019 is infrastructure, building infrastructure this year. 2020, I think you'll see a lot more security tokens. So we've got a client at the moment for the other business, which is tokenizing a holding company. So Topco, which owns a lot of smaller companies within the group. That's a perfect hedge, diversified strategy. A token linked to the performance of 10 other companies. You know, where there's a mix of companies that are recession-proof or different industries. It's almost like a fund of funds, an indexation. Right. So these security tokens are coming, but there's going to be some bad ones, and there are going to be some train wrecks, and there are going to be some failures. There is going to be. Like the .com was we've got to remember 90% of businesses fail anyway. You know, ICOs, everyone knocks them, but
it's the same as any startup.
Majority of these ICOs shouldn't even been seen the light of day, actually.
Sure.
But even if they were sensible projects, the failure rate is still 90% anyway. So it's going to take time. I think 2020, 2021, you'll see the security token market with exchanges like ours providing some credibility. I think that will bring institutional cash in because you can sell products that is trusted with legal wrappers, and once the institutional capital starts coming in, then the whole thing will start growing and expanding. So Tim Draper said, what was it, he reckons a $4 trillion market by 2023, 2025 potentially.
So Nick, Dmitry, there's so much here that I know people who are going to be watching this are going to either agree or disagree with, but either way they're going to want to be involved and they're going to want to have a voice. How is it that the community can follow what you're doing, especially with the Crix Exchange? Where can they go right now to keep up to date, other than on the channel as well, which we'll keep them up to date on? But where can they go right now to have their voice and see what's going on with everything you're working on here?
Well, we plan to launch the sandbox, which will demonstrate every function of the exchange for test coins, probably middle May.
Okay.
So you can play, touch, play,
and
feel.
And this will be sandbox.crix.io, something like that. Okay.
And that's important. So touch it and feel it. We're very much a case of we're not going to, we are going to send messages to people and tell people we're here, but ultimately we don't want to send a glossy brochure that says, here it is. Come and play. Come and test it. See for yourself. If you like it, you'll stick with us. If you don't like it, well, then you'll move on to the next one.
Right.
Simple.
And Nick, you're very well researched, as well as Dmitry, in this market. You have obviously a lot of knowledge and opinions and views on how this should evolve. Where can people follow this thread and the story of what we were just talking about now? Where are you writing blogs or articles, or how can people find you online?
Well, obviously, I'm quite social. I've got quite a high social media profile, and I do write from time to time. So, through LinkedIn or from Twitter, I've got a Medium channel. There's various stuff, and I write things about everything: geopolitics, government, Brexit, crypto tokens, technology generally. And as you rightly say, what we put out there and what I write about will divide opinion.
Right.
But the whole purpose of writing and doing what we're doing is we want people to start thinking for themselves. The governments and the media dumb everyone down.
Right.
And people are better than that.
Right.
Your community is better than that. We have a voice, and my voice is wake up.
Right.
Do your research, decide for yourself. But I'm trying to poke people with some thoughts where you're going to agree or disagree. But the fact you agree or disagree is a good thing.
Right.
You know, we don't have all the answers. We just want you to wake up. So that's why, you know, that's why we pose some of these.
That's your core message.
You know.
Wake up. That's
Yeah, wake up. You've been sold a lie, for
Just
goodness
wake
sake. Don't buy a pension. Don't believe what the BBC say because it's a fascist company. And wake up. Everything you're being sold is got strings attached, and it's not what it is.
100%.
You know, so the younger people out there are completely, I think, looking for new answers, which is a good thing. But don't believe anything that's out there at the moment that's coming out of the media and government, because it's make your own mind up.
Right.
Yeah.
And Dmitry, same for you. Final question from your perspective. What is the one message that you have for the crypto community right now?
Well, say transparency and trust. So that's important. So we have to prevent the manipulation. We have to be transparent, and we have to actually self-regulate. Because we don't need to wait while the regulator will come and try to regulate the space.
Great.
So there's a huge potential of the self-governance, self-regulation in the community, and actually happening. So because we see how Bitcoin is organized. So it's self-regulated, and we need to sort of cover with this patterns, self-regulation patterns, cover the whole industry, including trading exchanges. So we need to start, every player needs to start exchanging the information about the bad behavior, bad actors, call out the names and stuff like that. Say transparency and integrity of and stuff.
Well, I think what Dmitrys saying is absolutely right, but there's two things going on. The first thing is that the way people consume information is very quick and very short term. People, you know, if you look at social media, there's loads of haters on there, professional haters, and I think the community is better than that. They do the research. Don't take somebody else's word for it. Don't read the thing on Twitter, which is sensational headline. You know, he's a good player, he's a bad. Do your research. There's so many opportunities to actually find out what's really going on, because I think it's an intelligent community. The trouble with social media, it's very veneer. It's quick consumption. It shoots from the hip, you know, and people get attacked. And there's a lot of people get attacked who are actually good people. You know, and the other side of things is that there's not many people making money in this market now. The bull run's over. So people are struggling for money. So what do naturally? They also attack each other. Right. And they do attack the people that are doing well. So, and it's just, I guess it's human nature. But I've noticed there's a big shift in social media in the last 6 months with this bear run really biting, because people are hurting. And there is a lot more trolling and hate and frustration coming out in people in social media at the moment. Yeah. And I don't think it's healthy.
We're definitely seeing that too. So that's an awesome message to take away. Nick Ayton, Dmitry Koval, thank you so much for having this interview with us today. I really appreciate that. There's very few people sitting behind an exchange who ahead of time, before they even went for the main launch, would have been so transparent, and that speaks absolute volumes. So thank you very much for your time.
Thank you.
If you want to get in touch with Dmitry and Nick, you've heard it. There will be a link very soon. It'll be sandbox.crix.io, and follow it on the channel. We'll make sure that we keep you up to speed with these guys. But you guys have been fantastic. Thank you very much.
Thank you.
Thank you.